Hello friends, this is Jimmy Singh, broker, owner of Supermax Realty, 647-961-2639, or you can visit at my website www.supermaxrealty.ca. So friends, in today's video, I would like to discuss how to finance rental properties, or if you are an investor who hit a roadblock and can't seem to get ahead of acquire more rental properties, give Supermax team a call. And in this video, I like to discuss some creative solutions, how lenders these days in COVID environment are looking to qualify investors so they can move forward. So first thing is, guys, these days if you already have bunch of properties looking to buy more, some lenders, they are now asking you your bank statement showing that you have 3 months reserve fund for each property. So let's say you have 5 rental properties, and let's say first property has a mortgage and principal or interest of payment of 2,000, so they want to see 6,000 for one property plus other 5 properties. They multiply and see that kind of reserve fund is there. So they are getting tighter, but the good part is there's still some solution which I will discuss. So first thing, what happen is, if you are first time buyer and at the same time you wanna buy investment property, so here is my option for you. So if you are buying a duplex, you can actually buy 5% down on insured mortgages. So you can actually live in the basement for whatever rent you're paying at the same time, and then upstairs you can rent maybe for $1,200 to $1,500, $2,000, and that whole rental amount is added to qualify you for more property. So up to 4 units, maybe triplex, 4+, owner occupied, you can buy today 10% down. So if you live anywhere in G.T.A, Golden Horseshoe, London, and are not working with the agent, give our team a call, Supermax Realty. And then what happen is, if you are buying 4+, same thing, you live in 1 unit, 3 other units income is added to your own income to qualify for more property. So typically what lenders do is they examine 2 things to qualify for your rental property. First thing is they check what we call DSCR, that is called debt servicing coverage ratio. Second thing is they check rental offset or add backs. So what is the difference? So first thing, I'm going to talk about debt servicing coverage ratio. The basic formula is net operating income divided by debt service, which is principal and interest. So I'll give you a very realistic example. So let's say your property is generating $2,000 a month in income, and your mortgage, which is principal interest, is $1,200, and the expense to manage the property, which can be taxes, repairs, insurance, vacancy rate, let's say is $500. So debt coverage ratio formula basically says you divide net operating income, how much revenue is coming, minus the expense divided by principal interest. So in this example, 2,000 minus 500, which is expense, divided by 1,200 is 1.25. That is actually the ratio they are looking for. So what that means is, the property generates $1.25 for $1 that is owed in principal interest, and they are very happy with that. So mostly lenders want minimum 1.1% coverage ratio for safety cushion. So that is something you have to keep in mind, how lenders are looking at it. And second thing they will check is rental offset or add back. So what are those? So let's say if you have a rental property, it's generating certain cash flow. So if you go to your own bank, let's say top big banks, they just take 50% of the rental amount. Rest of that you have to qualify with your income, right? So they might deny you that you can't qualify. So what B lenders do, B lenders can be credit unions or certain other lenders, monoline lenders, which are only available via good mortgage brokers. They actually take 80%, even sometimes 100% of the rental amount, so you can qualify for more property. So keep that in mind, about the add backs. That makes a huge difference of you getting a yes and no for the next property. And these days some lenders, they don't like Airbnb short-term rental. If you don't have a lease together, they like to see a lease. So if you have a student rental, you put like 6 people on it on monthly basis, they don't like it. So what you can do is creatively is set up a corporation and pay yourself T4, T5 every year. So lender can at least take an income of 2-year average for that property. And other thing, I recommend my client these days is, get your paperwork ready. At least 3 months reserve fund for each property. You have to have a full lease and bank statement showing where the money is being transferred by your tenant, because they want to see an arm length transaction. They don't want to see that you rented a property your cousin or like your brother or sister. They want to see as a stranger you're renting your property to, right? So other thing, they might ask you, if you can't qualify on your own, they will ask you for a co-signer or a guarantor. So what is the difference? The difference, friends, in co-signer, that person, co-signer, is responsible for your payments and goes on the title, versus a guarantor, he also does the same thing. He's responsible for the payments in case you are in default, but he doesn't go on the title and has no claim on that. So just keep in mind, typically you see co-signers as a family, like spouses or father sign for kids. So let's say, somebody has a less income, so other person bridge that gap of extra income. And he is also signing mortgage documents just like anybody else, the co-signer. And if you want to get rid of the co-signer name from the property, you have to go to the lawyer, and there's a legal fee involved, and you might need approval from the lender as well. So in case of guarantors who doesn't go on the property, banks still want to see his financial strength of the guarantor. He has to still, have a disclosure statement with asset, liabilities and everything. And in this situation, what happens is, buyer has the income. He might be self-employed, has a good income, or somebody else, but his credit is blemished or not good, or maybe too new of a credit. So in that situation, we need guarantors. So know the difference. That way, you are ahead of the game. And always get an independent third-party legal advice, not from the lawyer who's doing a deal or doing the transaction. You should have your own unbiased opinion, so you should know the risk involved in signing for somebody. Second creative solution you can do is, if you're buying a triplex, fourplex, and seller has the property paid off, instead of him selling and getting a big tax bill for capital gain, you can recommend him maybe take a small mortgage of vendor take back. So let's say, if you have 10% down and your lender wants 20% minimum down payment, you can ask the seller if he's willing to hold a 10% mortgage at a nominal interest. That is something, that is creative solution. And third thing is basically, if you have a friend or family who has a property and you don't have much money, what you can do is, you can actually tap equity of that property, or the lender can put a collateral mortgage, and basically it's kind of a blanket mortgage. That way the risk of lender is less, and the mortgage is registered on the property as a second property. So let's say you're buying a property and your parents or a family has a property which has equity. So what the lender will do, he's put a second property, second mortgage or lien against your family property. So you can pull out equity and use as a down payment towards your new product. So there'll be 2 liens registered. So if you're using a B lender, there might be 2 liens registered or 2 mortgages registered. So it is a complex transaction, and the lender fee might be higher. So typically what happens is, some people know the opportunity cost. They know, it's okay to pay that kind of fee. So at least they can go and buy a property which is appreciating. And in long run, if they make 100,000 in 5 years, they might have to pay 2 to 4% lender broker fee in case of a private mortgage, where the interest is basically 6 to 12%. Again, it is not recommended for everybody, but a lot of people who are short-term investors, they borrow from hard lenders in this situation. And the other cost might be appraisal fee of $400 to $500, and as I said, 2 to 4% lender and broker fee. So in case of B lenders, which can be credit union or monoline lenders, their fee is 1, and then because brokers are compensated differently, and then at the same time, some brokers charge fee on top. So those things you ask them. And what happen is, mostly when you go to a lender, they have some people who can come and see your property, do appraisal. So or they can do like electronic appraisal, which we call MLE model, where they can have evaluation electronically. So ask all these costs and find all the creative solutions when you sit with your mortgage broker. Can I bring a co-signer to the table? And then, or can I get a guarantor on the table? Can the lender or the seller hold a second mortgage? Or can I put a collateral on my other property to finance the next property? Because I was working with the investor recently buying a commercial property. So what happened is one of the rental properties is paid off. So the B lender put a lien on as a second mortgage registered on his rental property, so he can tap equity and put towards down payment on his plaza. Or sometimes people buy pre-construction condos. So if you have a rental property paid off, you can put a second mortgage, pull up the equity. Obviously you have to sit and see what is the cost involved, what is the interest involved, because sometimes it is easier to qualify for a line of credit for parents to help the kids. Again guys, in short video I can't discuss all the creative solutions or the financing models which we use for our clients to acquire the property. So if you are in a market and you don't know how to start, or you go to your bank and the bank says no, one lender no doesn't mean it is no for everybody. I have clients who have big portfolio. I've been personally investing in real estate, and we always find a way to get the job done. So if you're looking to buy an investment property, pre-construction condo, brand new house, anywhere in Greater Toronto area, Golden Horseshoe, London, Kitchener-Waterloo, give Supermax team a call. You can call me directly at 647-961-2639, or you can visit my website www.supermaxrealty.ca. Thanks for watching. God bless you.